What do you expect to see short, intermediate, long term in the shipping markets?
I'll start with the container space. I just came from the container ship panel here at the conference. Near term, we're not expecting much to change, and by that I mean we expect container ship rates to remain relatively soft, and the supply side is really going to drive any sort of incremental upside we see there. The interesting thing is within the container space, while not a lot has changed from a container ship rate perspective or day rate perspective, you've seen the evaluation of credit risk really change over the last 3 to 6 months, with freight rates moving higher, with the revitalization of a lot of container alliances. You're seeing the same charters effectively being valued at a higher basis. So you're seeing names like C-SPAN and Costamare and some others see a little bit more strength than they otherwise would, given where container ship rates are. So I think there's a little bit more of a concern right now in terms of credit quality and the quality of a lot of the counterparties that these guys are doing business with. In terms of dry bulk, we're still relatively bearish long term, until we see the order book start to come down a little bit, and frankly, the lower barrier essentially there get us a little bit worried. But again, there's a fair amount of volatility in that space. So as some of these names start to go through some restructurings, as they start to kind of reorganize their balance sheets and kind of get themselves right-footed, we think there could be some interesting plays there as well. We just don't think we're quite there yet. And in the tanker space, we've seen a really big squeeze in a lot of these names the last 2 or 3 days. The space is carrying a tremendous amount of short interest, anywhere from 25 to 45% for some of the more market-levered tanker names. And it really doesn't take much to kind of set that off. We've seen, Atlantic Basin rates start to move higher due to some kind of micro supply-demand imbalances, and some delays in getting new tonnage over to that area, and that's driven a spike in rates to profitable levels for most owners. And what that's done is just driven a lot of covering within the tanker space. So names like Frontline, names like OSG are seeing a tremendous amount of upside just in terms of covering. It makes investing in those names very, very difficult at this level. Makes trading them very, very exciting. And there's a lot of movement, obviously. But generally speaking, we think if we look out maybe 6 months to 18 months, we think it's a bit too early to own all the tanker names yet. But we do think we are getting closer to a turn. We do think we're going to start to see a turn, at least in the equities, potentially as early as Q4 this year. And at that point, we'll probably look to own a basket of names. And again, we are starting to see the order book continue to come down. We think by the end of this year, unless we see a lot of new ordering, the order book could be somewhere in the high single digits, which will be at about a 15-year low. So I think that's going to be a pretty big data point that investors are going to kind of hang their hat on, saying, I might not be bottom ticking this, but if the order book is at a 15-year low, we're heading into a period of seasonal strength. Maybe that's the time you really see these guys start to come in and maybe get in a little bit early, but try to get in at the bottom end of the cycle on most of these tanker names. Right now, the names that we'd still own today are still the higher quality, more diversified, kind of defensive names, TK Tankers, Capital Product Partners. But in general, we think we're inching closer in the tanker market. We're just not quite there yet.
Do you think investors have a difficult time seeing beyond the current rate cycle?
It's a great question. I think the short answer is yes, but I think the caveat there is that we're seeing so many restructurings that people are having a very difficult time and trying to figure out what sort of long-term rates to really price into this kind of environment, because you see asset values coming in, you see spot rates very, very low. I think it's very, very difficult to have a lot of visibility 3 and 5 years out, and when you're really trying to value a company that's going through this kind of distress, or an industry that's really going through this kind of distress and this kind of upheaval, you need to have a little bit of visibility, a little bit of certainty in terms of what sort of long-term earning streams you're really going to be looking at. I don't think we quite have that yet. So I think that is kind of off-putting for some investors. I mean, there are obviously a lot of very well-educated investors that are starting to dip their toes into some of these sectors, and a lot of that, frankly, has to do with where asset values are, and what sort of residual values they're looking at. But it is definitely, low spot rates is definitely a hindrance to the everyday investor, and institutional investors for that matter. But you are starting to see some people starting to dip their toes in the water, and again, a lot of that is because asset values have come down to the point where the residual value risks are going to be relatively low, so they don't have quite as much at stake.
What advice would you have for investors in the shipping space right now?
We're still long quality names. We still like distributions. To get in this part of the cycle, especially on the tanker side, we need a double-digit yield to compensate us for waiting around on a turn, but we do think we are inching closer. So I think there always needs to be an emphasis on quality, and I think you can certainly find quality stocks within dry bulk, within tankers, and within container ships. But right now, our emphasis is still on quality names, secure distributions, and then kind of picking your spots in terms of buying kind of cheap market leverage, or names that are levered to a broader turn, which we think is coming. We're not quite there yet, but we think it's coming.